Welcome to the Movers and Shakers podcast, where real students are doing real deals in the world of multifamily real estate. I'm Vince Gethings, the owner of the Wheelwell Profits Academy. Listen in as we dive into the journeys of driven individuals who are turning their dreams into reality. These people are just like you, taking action and making things happen. If you enjoy the show, please like, subscribe, and if you're ready to take action, check us out at wheelwellprofits.com to learn more about our incredible community. Let's get started.
Interview the upcoming generation of Make It Happen multifamily investors to share their story.
Welcome to the Movers and Shakers podcast. My name is Gino Barbaro, co-founder of Jake and Gino, multifamily investor, educator, father, mentor, and I am joined by the hip today by my co-host, my brosif, Josh Rusin, the community director of Jake and Gino. Josh, how are you today?
Gino, doing well. Very fortunate to be spending a week here in Florida with you and my second family. It's a little bit nicer here. Yesterday we had weather in the 80s. I got some pictures from friends back in Knoxville, and there's snow on the ground there. So I made the right choice. How are you today, Gino?
We're doing good. We've got a good guest on today, a really powerful guest. I remember when he first joined the academy, he was like, who's this Jake and Gino, and how can they help me? And he had all of this, I guess, analysis paralysis. But I think since he's joined, he's been crushing it. And I think the journey to continue to the financial freedom and how multifamily has changed his life, we're going to go over all of that in this podcast. So Josh, hit up the bio. Let's introduce our guest today.
All right. Today we have Isaac Chiang. A little bit about Isaac. He was born in Taiwan, came to New York in 1984 at the age of 14. Growing up, he worked as a busboy in Asian restaurants, delivered newspapers, and also worked as a guide in dance clubs. After college, he worked in the tech industries for 15 years, being an ex-employee of Intel Corporation, as well as founding and selling a tech startup in 2007 by the name of Formosa Technology, which manufactured and distributed memory chips for both PCs and cell phones. After that, he took his savings and decided to jump into multifamily in 2010. Currently, Isaac and his wife are full-time real estate investors owning a personal portfolio of approximately 200 units in the greater Cincinnati, greater Charleston, and Queens, New York area. Welcome to the show, Isaac.
Oh, thank you, Josh. Thank you, Gino. Appreciate the opportunity to tell my story.
Isaac, why did you get out of the information technologies? Why did you sell that company before getting into multifamily?
At that time, it was Dubai went through I had a company in Dubai. I lived 7 years there, and Dubai was going through a big bubble. And when the Lehman Brothers came, a lot of people were just downsizing, and I thought that was the time. Also, my son was born. I wanted to come back to New York, so I sold the business. Fortunately, at a profit, and I took it back, and then kind of reset myself back here in New York.
How did you get introduced into multifamily?
My parents, they always, they were in the residential property business. And to be honest with you, I would always be the one going to court evicting non-paying tenants. And when I came back and I started doing that again, and because, I was the one with the language skill, and in New York, it's horrible. I went to the court 3-4 times evicting tenants. Some of them owe 6 months, some of them owe 9 months, and it's just impossible. And then I started saying to myself, I can't put my money in New York. I got to find some other ways, where it's fair to the investors.
And how did you go invest outside your market? What were the steps that you took? Maybe you can tell the listeners out there, what steps would you take to go look outside of your market? Because most people have that limiting belief of, I've got to touch it. And I was part of it. I was included in that when I first started out. It needs to be in my backyard. I need to touch it. I need to drive by it. You already had that mind shift of, even if I can touch it, it's not worth it because I can't make money on it. So give me a couple steps of what you did to start looking outside your backyard.
Well, I live in the Asian community, in immigrant community, they work a lot with cash. So this is difficult. But the pain of going through the court and evicting tenants, I had a tenant literally said, 3 months, I didn't pay you and I'm doing you a favor. I couldn't believe it. And so I started by, I took a course. my former mentor, he's not teaching anymore, and really got into how to underwrite and then start to explore. But it was still difficult, So my first deal was a mere 8-unit property in Midland, Texas, and that is the middle of nowhere next to oil field. Mm-hmm. Because I just purely crunched numbers. And it was a 7-hour flight because it's connecting flight in Houston. But the numbers looks wonderful when the oil is up, right? When the oil is tanked, the half of the population disappeared. Mm-hmm. And that time I was in dire straits. I said, man, I can't do this. So I sold the property at a loss, and then I went into the next deal, which is 23 units in Cincinnati. Then 48 and 80, and I start to trading up.
Mm-hmm. So what did you look for in a market like Midland, Texas? Probably job growth is not there. It's probably dependent upon one industry. What did you start looking for in these markets, in these cities that you said, okay, I want to plant my flag here and invest in these cities?
That's a good question because I only have one partner, right? So it's a personal portfolio. So I look at a lot on the return, the KPIs, what are the returns, and that was the main point. But also now I learned through the lessons that you got to have a long-term perspective. So now with the markets I'm in Northern Kentucky, in Charleston. In Northern Kentucky, it's Amazon play. Mm-hmm. It's a long-term job growth. And in Charleston, it's automotive. It's a right-to-work state, and it's automotive. A lot of automotive manufactured there. So automotive is going to grow into obviously electric cars, and then finally selfless driving.
Mm-hmm. Autonomous, yes.
Autonomous driving. So there's a lot of jobs there. So that's how I ended up in these two markets.
So education times action equals results. Why did you join the Jake and Gino community? And what have you, learned, or what are the big learning lessons that you've taken away from the community?
Well, I before joining Jake and Gino, I saw the podcast, and I was really impressed at the questions that you and Jake made, and that the consistency of the interviewers that you brought on, it was just really amazing. It was more than what I expected, and I really wanted to be in the community. So I hit up on you, right? I directly Facebook, I hit up on you, and then you told me about the community, and I joined it, and then I really wanted to be a part of it. But the most of all is I wanted to get my wife on board. Mm-hmm. My wife is in Manhattan. She's a sales person, real estate sales in Manhattan. So they're looking at a lot of these speculative capital gains, and she doesn't understand our world. So I wanted to get her on board, and so I got her through the list, going through the lessons, and she went to the trips to Nashville and Jacksonville. And, she's now we are doing weekly meetings together. So that's, thanks to Jake and Gino, that was really, really something.
So you're teaching here, if it doesn't cash flow, let the grass grow, right? I mean, it's important that people understand that there's metrics. So you're talking about metrics. What metrics do you like to look for when you're analyzing deals? I mean, basic cash on cash, or what are you looking for in a deal?
Well, I have 5 parameters. So one is the market must have 200K and up population, MSA, population trending upward, diverse economy, because I learned that in my 8-unit deal, it was single industry and I got burned. Mm-hmm. Okay. And the landlord friendly state. And finally, single flight. Never do anything that's connecting flight, because I did that for a couple of years, and that was brutal. And as a bonus, if you have a speedy cap rate compression, that would be even better, like the Sun Belt.
So before we get into the first deal, what are your goals going forward? What do you want to do with your portfolio? Do you want to continue to buy? I know you've done a big refi in the last 6 months. If you want to talk about that, what are you looking for future-wise?
Sure. So last year, So also that was also I was looking at Jake and Gino. They were doing amazing things, right? I saw you guys from 500 to 700, 800 in the first 1,000. You were able to do the refi and roll. And I said, man, I gotta learn from these guys how they do this. And so yeah, so the refi and roll was a very important thing in this. What was your question again? I'm sorry.
Oh, that's right. The goals, as far as your goals, what are you looking for? Because I think, I want to go into the first deal a little bit more. And you mentioned the refi and roll, where a lot of people aren't really teaching that because they're teaching just syndication just to raise money. And I think syndication is a great tool. It's just one of the tools in the toolbox. I think another tool in the toolbox is actually to buy your own deals, to refinance the deals. You have to buy right. The 3-step framework is buy right, manage right, and finance right. And it's important that you do all three. Right now, it's really hard to buy these assets right. But if you do buy them right and you have cap rate compression and you're buying them right, you're able to refi this money out and repurpose it into the next deal. So that's why the importance of refi and roll is. But what are you looking for going forward in your portfolio? Are you still staying in those markets? Do you want to continue to expand? Are you able to refi any other deals?
Well, right now, I tell you, because of the Amazon plan that's going to open in 2021, the rents, keep going up. So I bought it. Luckily, I bought it 4 years ago and also 2 years ago. So I got to keep up with the rent. Mm-hmm. So that was it's very difficult because you're talking about a lot of people that you are working with, and it's always a value. It's always a balance, right? You want to raise the rent, but you don't want to stampede. Mm-hmm. So, and also some of the renters, they are very, very loyal people. So how do you balance that? So that's a constant discussion. Then, you see the comps, what other people are doing. Then you start seeing trends like, a company, they say, oh, the rent is, let's say $700. But then they have the rub that's 120, right? They have, now before it was water and sewer, right? Now it's water, sewer, trash, pest, and then all these things, they're throwing on, but the rent is only 700. So that's the game that's going on now. So you gotta be there, with, in that environment. But now I'm just trying to make it cash flow, cash flowing, and also considers our own deals. So we want to fix it the right way, but for the long term. And since the market has a long way to go, just make sure cash flow, and then I'm gonna, have money on the side and just see what happens. There's a lot of things going on. There's that China, U.S. tariff war going on. There is the presidential election. There's AI, right? We haven't talked about AI. That's going to be a catalyst in terms of what kind of jobs that's going to be valued, right, for the long run. So I'm just kind of sit on the side to see what happens.
Let's go back to that first deal you did, not the one in Midland, but the next one. I want some learning mistakes that you made that you can tell listeners out there, hey, don't do this. We already know the market in Midland was bad. There wasn't a diverse economy enough. What other mistakes have you made in some of your deals that you say, wow, I never thought about? I just want you guys to avoid what I did in this deal.
It's a good question.
This could be the whole show, by the way, because I'm sure you've made 100 mistakes.
Many mistakes. Okay. The recently, I'm doing the repiping again. It's the second time repiping 36 units. I got this deal from off market from a friend of mine who is actually he's now a politician. He started as a police officer. So I say, hey, let's say call him Mike. Hey, Mike, I bought this property. It's a great area, but it's you got the pharmacists, you got the people who do drugs, you got, a lot of these riffraff. What do I do? I never done this before. And he said, listen, Isaac, I'm going to do you a favor. I'm going to park my police car on your parking lot. And all of a sudden, 50% of the crime is gone. Because everybody's wondering, where's the cop, right? And then, when he has a charity event, I would attend. I would write him a check to support the charity. And then now he's a councilman for the district. then, when he became the councilman, he introduced me to people that, were, he's also the chairman of the landlord association,
Mm-hmm.
that he introduced me to a deal that's not in the market. Then I bought it. It was like, it was very, very cheap, right? But then there's so much deferred maintenance. I bought it at, I think, $29 a door when the market was $40 a door. But the deferred maintenance, we had to do the repiping, the aluminum upgrade, the wire to do pigtail. The pigtail, man, that was $1,100 per door. And the sewage pipe, the whole pipe was $60,000. And then all kinds of other deferred maintenance. So it turned out to be, it's a 36 unit. It's $400,000 on their market, but I spent $400,000 on the 36 units of the deferred maintenance. So it turned out to be a wash, right? And now there's still other issues, right? Leaking there. So now I understand, it's important to go big, and preferably not the heavy lifting that you have to do. The CapEx, preferably the light turns and the cosmetic, the paint job, and that would be easier, and also the valuation would be easier to force up.
So Isaac, in our academy, we talk a lot about due diligence. I mean, the aluminum wiring is something that maybe you might have been able to get a little bit of a pricing off of, correct? The repiping, that's something where you go in with your due diligence and you bring a CapEx team there and say, hey, you know what, there's this much money. On this property, were you able to get it at that price? Do you think you would have been able to get more money off that price if you went in with all this documentation, or the seller was there at $29 a door and he wouldn't go any further, any lower?
That's the thing, with these connections, it was a lot of the you saving face, right? You can't, it's like I can't go hard on the negotiation because it was a relationship based.
So my recommendation to everybody out there, especially someone like Isaac, you've done this deal before. I would have a case study on this deal. And every time you negotiate with the broker and you say to the broker, hey, listen, I bought a great deal on the market, but look at all the deferred maintenance. I know these issues going in. If there's federal breakers in there, Zinsco breakers, if there is aluminum wiring in there, if there's cast iron plumbing pre-1970, these are warning flags. I need to put this money into deferred maintenance, into my due diligence budget. So this number may seem low, but it's being realistic. So you can use that for your next negotiation when you go into your next deal, because you don't know until you don't know. And it's good you took, I guess, a big risk getting into that. And you think with that price, thank God you got the price that low, because if you didn't get it that low, then you really wouldn't have any equity built up. You'd have overpaid for that property. So that is awesome. I love that. Any other big mistakes that you've made on deals that you said, you know what, I have to be really careful of that for my next deal, or I want these people to avoid this mistake?
Boy, there's a well, I don't like bridge loans. I could tell you that. I did a bridge loan, and it just not only the rate was extremely high, but they are asking for double the umbrella insurance, double the it's just very, very costly. If possible, I prefer the just buying from the local bank. So that's why the relationship with the local bank is extremely important. And then in 2 years' time, jump into agency loan. I think that's the cleanest and easiest way to go. I did with the South Carolina deal with the bridge loan. I don't know if it's still working out pretty well, but it was very, very expensive. I don't recommend anybody to do it if they don't have to.
Let's take a moment to listen to our sponsors.
Gino, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. I know that you've been hard at work helping Jake and Gino students do just that using our framework. Can you explain to the listeners how they can get our help?
Guys, we've been hard at work growing our community of like-minded investors, and the results of our members has been nothing short of incredible. We're looking to grow this amazing group. What we're looking for is those who want to follow our proprietary framework that we've created created. Buy right, manage right, and finance right. Leverage our connections, education, and mentorship as ways to take your business to the next level.
So if you're interested in finding out more about how you can become a part of our amazing community, apply to work with us at jakeandgino.com/apply.
Okay, Isaac, I got some short answer questions here. But before we dive into those, what I want to do is I want to talk about some of the refis I've seen you do since joining the Academy. If you want to talk about your most recent refis, I would love to tell the audience a little bit about those and really spotlight the power of the refi and roll strategy.
Well, can I talk about my first refi? Because that's the, that's the,
Let's do it.
the spotlight, So the first refi, man, it was, I bought it at 1.4 million. I spent about 48 units, half 2-bed, 1 bath, half 1 bed, 1 bath, in 12 minutes from the airport, which is where Amazon's gonna put 70 Boeing 767 there. Jeff Bezos was just there 6 months ago, breaking ground. They purchased 300 acres of land. Gonna make it. That's where they're gonna make it the prime one day. I mean, now it's already prime one day, but I think ultimately they're gonna prime same day. So they're gonna really revolutionize the industry. In that area, 300 circumference. Covers 60% of the population. So in this, I think I can probably refi that twice, like Jake and Gino, their example. I think Jake spoke about it, like the refi twice. So I'm aiming for that. And when you refi, right, it's very important to have a good relationship, communicate with the bank. And also let your local bank know that, I'm going to refi, but I'm going to do the business. I'm going to buy the property and then I'm going to use you again. So they don't feel like they're, the bridge is burned, because it takes a long time to work with, to build a relationship with a good local bank. And I got it evaluated at 2.4 million and was able to pull out $920,000. And it was just between me and my partner, me 2/3 and him 1/3. He's a CPA, and the rule of thumb, I think Gino talked about this a lot. Never touch those money. You don't kill a golden goose. You put that money and you look for the next deal. Okay, so I tell my wife that. My wife want to touch that money, and I said no. That's the golden goose.
It's very tempting to kill the golden goose, right? And we've been able to refi since we started over $9 million from our portfolio. So you can go look at my parking lot, my driveway. I have no Lamborghinis, I have no Ferraris, I have no yacht, I have no boat. I've repurposed that money and put it back in and just kept growing the portfolio.
You have a golf cart.
I have a golf cart, 10 grand. I spent 10 grand on a golf cart. That was painful, dude. That really hurt. But you know what? I promised my kids, so I had to buy them a golf cart. But that is really important. It's a loan to yourself, a refi. So it's quote unquote tax free for the time being. When you sell a property, you have to, really basically it gets caught up and all that. But for the time being, you pulled out $450,000 and you're going to repurpose that money. That's almost like making $650,000 to $700,000 as taxable income. So it's an amazing benefit that you roll that money into your next deal. You still control the deal you have. You could probably have cost segregated the deal that you had, and you have this refi money that you have in your hand right there. You're going to purpose it. So you have an asset that right now you're holding with no money of your own in the deal anymore. You've refied it out, and you're cash flowing, and you've got the tax benefits. You have I call it the trifecta. You've got an amazing thing, and it's only 48 units. And to think about that, and as you have that money and you start scaling up, it's an amazing business. It really is.
Love it. Isaac, what's your best tip for someone that's trying to get in their first multifamily deal?
I say really practice on underwriting and know the KPIs, this cash on cash, break even, DSCR, all that stuff. Because you want to know what you're buying, right? You want to basically the game is you buy at this point and where can you take it up to? Where can the market support? And that delta is going to create you the next refi. That's going to be your C money. It's very important to buy, win on the buy.
I like that. The education and the knowledge to be able to predict accurately where the asset's going to go. What about your favorite book you've ever read?
Oh, man. Well, I'm going to tell you two books. Right? One is the book Only the Paranoid Survive. It's by Andy Grove, our ex-CEO. And actually, I wrote down a quote, if you don't mind.
Shoot, let me hear it.
Okay, Andy Grove said, always be alert of the changes in the environment. Choose a direction that navigates through the valley of death. So I remember back in Intel, right? Every morning at 8:30, right? Without fail, snow or storm, there will be a meeting because our production line, there's no backup line. Usually there's a backup. And we talk about a cup of water. We talk about somebody dropped something. We talk about little things because you solve the big problem, you solve a small problem, and there's no problem. And that's how Intel stays with 60% margin for all these time till today.
I love that. So I'm going to give a shout out to one of the Jake and Gino students, Alvin Garlitos. His quote is, be in love with your actions, not your results. So that's what you're talking about. You're talking, Isaac, about being consistent, getting out there every day, fall in love with what you're doing. Don't worry about the results from what happens because those results are actually going to follow up. You buy the 48-unit deal. You fall in love with the actions you're taking every day, and the result of the refi, the result of cashing out, the result of cost segregation is going to happen if you fall in love with those actions.
If I can just one more book.
Sure.
That book I started reading as I was doing some research. There's AI Superpower, China, Silicon Valley, and the New World Order. I think going forward, AI is going to change the game, right? It's going to change the kind of jobs that's going to be popular. It's going to change the whole environment, and so I wanted to look more into that. Just looking forward.
Well, Isaac, right now already AI is already changing the way property management is booking appointments, leasing agents. So we have Lisa on our folio. She's AI. She's actually booking a lot of leasing showings for our property managers. Wow. I don't think they're thrilled because it's AI. Their Lisa's actually texting with tenants. And what happens, she can actually, I'm calling her a she, the AI can actually interface with the property manager's calendar and sets up the appointment for the property manager. And it's just, 7 out of 10 of those touches don't get pulled through. They're probably the property manager, but the AI is pulling those through. So we're showing more showings. There's a lot more showings going on. So that's one way that AI is really affecting property management. It's just the tip of the iceberg going forward.
When you say AI, that's the software.
Yeah, So it's through
software.
Yep, it's through AppFolio. AppFolio has an artificial intelligence that you can use through their platform. Yeah, it's awesome. It is a cool product. It is awesome.
Amazing.
Yeah, so there's been a lot of golden nuggets on this show. I want to dive into a few of them, and I know, Gino, you're going to add a bunch as well. So some of the learning lessons I took away is low price doesn't always mean a good deal. Isaac saw that he was getting a deal for $29,000 a unit, which is below market price. However, with the deferred maintenance, they ended up taking it closer to market price. Another thing, and when looking at a market, obviously when Isaac started his career, he saw that in New York specifically, it was a very landlord or tenant-friendly state, and that makes it very hard to do the business. So knowing those factors in there, and the power of relationships, having your significant other on the same page as you, and leveraging that to be able to get deals and good terms with banks. Gino, what takeaways did you have from today's show?
So everyone, I want you to take out pen and paper because this is important because Isaac was talking about how to choose the market outside your backyard. So I've added a few. So the first one is choose one market. That's the first thing you need to do. Focus on one market because if you're underwriting deals in several markets, there's different KPIs for every market. Isaac said $200,000 population and above. That's number 2. Why is that? It's because you want to find qualified property management. Anything smaller than that, anything smaller than 100,000, you're not going to find a qualified property manager. If you live in the market itself and you're going to manage your own assets, that doesn't really affect it. But if you're going from out of state, you don't want an MSA of 30,000 because it's going to be really hard to find property management. The third one is a diverse economy. Don't have one major employer like Kodak in Rochester, oil and gas in Texas. That's Texas economy has really evolved over the last decade, where they're really getting tons of jobs from different industries. Have a diverse economy. The next one is landlord friendly. If you can go to a state that has landlord friendly, because everyone out there, you are selling time. It's like an airplane. Once the airplane goes up in the air, that seat is not sold, you lose revenue. If it takes you an extra month to evict a tenant or to get a tenant in there, that's lost revenue. The next one that Isaac mentioned, single flight. If you're in California, I mean, does it really make sense to invest, let's say, in a secondary market in Ohio where it takes you 8 hours to get there and then 8 hours to get home? I don't think so. Find somewhere where you can actually access an easy market. The next one, I would say, for us, we like the B and C space. Be really crystal clear on what your business plan is. What is the business plan going to be involved? Also, next one, job growth. We like to see jobs coming into the market. That's what we like to see. I don't know what people like, 2%, 3%. Just make sure that you're getting some decent and healthy job growth. The next one, you need to have enough assets in the market. Just because you find a great market, let's say it doesn't have any multifamily assets, there's going to be too much competition for the assets that are there. It's going to be bid up. So make sure there's enough product in the market itself. The next one, you need to visit the market. It looks great in Google. Isaac's got a map behind him, right? Maps look great. But until you go there and see where the Kroger's is and where the Chick-fil-A is and where the Panera is and how the city lays itself out, you're not going to know. So once you've chosen it, it's time to go out there and meet these people. The next one, I'm giving you a big list here. Got to go back and listen to it. It's important. KPIs. What are your KPIs? What is your cash on cash return you're looking for? What's your debt coverage ratio? What cap rates are you willing to invest in? The next one, know what the expenses and the income, really know how to underwrite the deals in the market, because in Knoxville, between $4,000 and $5,000 per unit to run an operating expenses on a multifamily property. Know what it is in the market that you're investing in. I think the last one I touched on, the path to progress. The path of progress is important to know in your city. Know where you're investing in your city. We like MSAs that have at least a $35,000 median income. That's what we want our neighborhood to be, because that's who we really target. 3 times rent roll, 3 times income. So if tenants can't pay the rent and you're in a depressed area, it doesn't matter if you're paying $10,000 a door. If you're not collecting the rent, it doesn't matter what the value is. So that's what we're looking for. I mean, go through that list, go listen to that again. And that's a really great way to just chunk it down and start investing outside your backyard.
Wow. All right, Isaac, how can the listeners get a hold of you?
I'm on Facebook, and you can always ask the Jake and Gino family. We're close, man. I'm sure you'll find a way.
Gino at jakeandgino.com. If anybody wants to hit up with Isaac, it's Isaac Chiang, Ching. Just hit me up by email. Say, hey, can you introduce me to Isaac? I will put the introduction out there, because that's what it's all about. Multifamily is a team sport. Jake and Gino is a great community. Isaac's leveraged that community. He's on the Monday lessons every Monday. He was actually asking me this Monday. I had a lesson with my wife this Monday, and we're doing a little life coaching, because it's not just about multifamily. It's really about personal development. It's about developing your personal life, yourself, and the relationships that you have, and how to make your life better, and really what thoughts are going through your mind. If you think you can do it, you can do it. If you think you can't, you can't. And part of that is really to have a community that you can leverage to help you to get to your goals.
Wow. Guys, I want to thank Isaac for being an amazing guest on the show and sharing his movers and shakers story. Now, if you want to be the next guest on Movers and Shakers, email me, josh@jakeandgino.com. And until next time, let's make it a Movers and Shakers weeks. See you, everyone.
Thanks, Isaac.
Thank you.
Take care, everybody.